Well, hello everyone and welcome to Risk. I'm here with James and we have a special guest today, Todd Bubba Horwitz, who is a professional trader. Welcome, Todd.
Great to be with you guys, James and Lee. It's a pleasure to join you. Glad to like the new show, like the logo, like it all.
Thank you.
Thank you very much.
So James, you have some interest in trading. I know you have some curiosity. Why don't you ask him about trading on the news?
What do you like to trade?
I trade every market that there is, and if it's, I'll trade cockroaches if they're liquid. Again, you need liquidity to be a trader. You have to be able to exit and enter the markets without flaws. Otherwise, you have no chance. You get caught in what we call the Roach Motel.
Tell us how you began.
44 years ago, I went down to the CBOE after quitting a job because I was too young. In those days, they could say you're too young to be promoted. So I told them to take the job and shove it, and went down to the floor, took the test, and became a floor trader, an options trader originally. And I ended up in the OEX pit, which at the time was the biggest pit in the world. It had over 2,000 traders in one pit, and I've developed, from options to futures to, again, any market that is liquid, I am willing to trade at any time, and I will trade 24 hours a day at some points.
Wow. Are you trading crypto these days?
I do. I don't trade them actively. I think I do believe in crypto. I think it's a real spot. I think it's a real product. I think the more governments and central banks try to regulate it, the stronger they're going to be. However, I only actively trade the products that are offered, like at the Chicago Mercantile Exchange, the Bitcoin future and the micro Bitcoin, and some of the ETFs. But I do, have a wallet or whatever you call it. I'm not that familiar with all that technology, but I do own some crypto as well there because I think that it's the currency of the libertarian. It's free, it's not controlled, it can't be manipulated, it can't be injected, and it can't be devalued while it's sitting in your pocket.
How do you qualify yourself as a trader? Are you a swing trader, or are you just go by technicals, fundies?
I use the only fundamentals I use is if I'm using my hedging model, okay, for my long-term portfolio. My retirement, my profit sharing, that is always protected through derivatives options, in which I have a model that is actually automated to roll up and down and to actually buy more stock every time the markets dip X%. But during the regular trading, I day trade. And in fact, I day trade live with my members every morning at 9:45 Eastern until about 10:15, 10:30. And I also carry positions in 29 markets, commodities futures, equity futures. Every day, I'm either long or short those positions, and those are built and designed on my algorithm that we use.
So how are you preparing for the day every morning? Because you told me you get up in an ungodly hour.
Well, right now I happen to be in my home in Las Vegas, which it's 5 a.m. right now. And how do I get up? I get up and I have to send out the trades if there are any, because I have to run the program to see if any of the trades have changed direction, because we are purely trend traders in our portfolio models. So first I run that, and then I send out the reports. I write for a couple of different spots, some commentary, and then basically I'm watching markets. I mean, I'll start trading anywhere, if the markets are moving and there's any liquidity, I'll trade, at 2 Eastern in the morning, 3 Eastern, 4 Eastern. Obviously, there's some action around the CAC when that opens at 1 a.m. and they're around the FTSE at around 4 a.m. So, those are times I'll trade, but really active trading usually won't take place until the New York markets open at 9:30. Again, it depends on the product. Everybody still basically trades actively based on the original pit hours that were there. Even though there's no more pits, bonds and currencies typically start being more active around 8:20 a.m. in the morning, and so on. So, we still follow the basic pit hours for real, true liquidity and real action.
Back when I was trading, we would just trade the market open and market close, because during the day the liquidity wasn't there, and you just chip away at anything you made. I would imagine it's still somewhat the same way.
It's still pretty similar. In fact, the end of the day is a lot less active today than it used to be.
Yeah.
With all the technology for the broker side of the world now, you can't get, there isn't any real margin calls that used to come in. In a down market between 3 and 4 was margin calls were made, and you would see some continued follow through. Now they've got you measured to the penny with your margin, and you can't get over margin basically in an equity account because they've got you by the what's.
And decimalization also changed things quite a bit.
Decimalization is what destroyed the floor.
Yep.
It's what destroyed everything. Now, there's a good and the bad. I mean, to me, it's all bad. But for the average retail trader, the decimalization, the high frequency trading that they like to blame, when the markets go down, I guess high frequency traders only sell, they don't buy. But, at the end of the day, if it wasn't for all that, you wouldn't be paying the commission rates you're paying right now, which let's say the average is $5. I mean, it could be less, it could be more, but somewhere very inexpensively versus 40 years ago, that same trade was $100 to make. So you had to hold longer to be able to make money. You couldn't try to scalp the market.
Yeah, you can really scalp these days because I don't really pay commissions on any equity trades in my account, which is insane. And I'm using an online broker. I'm not using Robinhood or any of those.
No, I use an online broker too. I pay $10 a month flat, and I'll probably trade average a month. I'll trade 25 or 30,000 options in a month.
Wow, that's pretty crazy. You're a high frequency trader. You're the one who brings the markets down.
Let's be clear about one thing. The true high frequency traders are retail traders, because when you get the panic, now that everybody has the ability to execute from their cell phone, from their laptop, from their desktop, when they start to panic, they all panic at the same time and they push the button. It's not the high frequency trader. That's the biggest crock in history.
Oh yeah, no doubt.
So, that's my take on the high frequency world.
So you wake up in the morning, you're looking at the markets, you start trading. What exactly are you looking at? Are you looking at news stories, or are you just looking at charts all day long?
We have a saying here at Bubba Trading: trade the news and you lose. Okay.
Exactly.
You can't read the price action ahead of time, then you shouldn't be trading. Markets in today's world of information, and as fast as it flows, the markets know what the news is going to be long before it gets there. Okay. And you can bet your ass that Goldman Sachs, JP Morgan, and those guys are paying millions of dollars a year, not for inside information, but for guys that can read the tape, can read the stories, and piece together what these reports are going to be. In fact, you can go one step farther. Typically, they're over anticipated, and they either sell them too far down into a bad report, which will a lot of times cause a rally, or they'll buy them too far up and create a sell-off, even if the news is good. And that is very common in markets and always has been. Over expectation and the path of the herd following, trying to chase it in one direction, usually will help it reverse once it gets there.
All right, so you're at your desk first thing in the morning. You identify a trade. How are you entering? How are you exiting? What's your risk strategy?
Well, it depends on if I'm day trading. On I trade when I'm day trading. I use a 4-minute and a 1-minute chart. Okay, the 4-minute identifies a trade I'm looking for. The 1-minute is the trigger signal, and there I use, just as of now. Now this changes based on volatility in the markets and based on how busy it is. But for today, for example, if I'm going to enter the Dow future, okay, the YM, if I'm buying it, I will use a stop that is 20 ticks below the low of that range of what triggered the buy to begin with. If I'm shorting it, I will be 20 ticks above. So basically my risk per trade is let's say $150 per contract. And if I trade 10, so it's, let's say $1,500 on a trade risk, but of course the reward is you never know. And that's one of the beauties of understanding how to use the markets and read the charts in your favor, is you continue to adjust your stop at certain key points in the chart as you're watching it, because the markets go through 3 phases: consolidation, breakout, and blow off. And those patterns repeat on all time frames at all times. So if you can understand how to read that portion of the market, then you adjust as they go. And you can listen, we had a trade on Monday that in crude oil, markets were dead. There was nothing to do. I was live with my group. And suddenly we get a trade in crude oil. And it turned out to be an $800 winner per contract. Okay. Now, that doesn't happen every day, but knowing not to try to pick an exit point and let the market take you out is the best way to go.
So when you say that, are you talking about using a sliding stop kind of methodology?
Well, again, I'm looking at a chart, ABC, pick it out, whatever you want, and I can watch the price action, and it goes through these different phases. It builds different levels of resistance or support. And as you watch these markets develop, you have a sense for what they're going to do next. In the meantime, you have levels now that say, okay, if it violates this number, it's probably going the wrong way. And you move your stops just below or just above those levels that you see that you can identify through a chart pattern. And that's how you move them up. So you allow yourself to stay in the market as long as you can until you get stopped up.
James?
You said you pretty much trade anything. Do you pretty much in terms of choosing what you're going to get in or out, it doesn't really matter, I guess, then if you consider something cheap, you just want to essentially look for momentum.
Well, I don't think anything's ever cheap. Okay, that's the first thing. Let's look at it from two different worlds. Okay, options, you often hear the geniuses, the pundits talk about cheap protection. There's no such thing as a cheap option. They're fairly priced unless they're expensive. When volatility is too high, there is no cheap market. Markets are 100% right all the time. The market is right, and the sooner that people recognize that the market is always right, the better the chance they have to be successful. Because cheap in one guy's eyes is expensive in another. So I don't call it cheap. I'm only a technical trader. When the technicals indicate that it's time to either buy or sell, I will buy or sell without opinion, without the news, because I don't watch news. In fact, the only news I watch is VSiN Sports and Information Network all day long. I watch the sports betting shows. That's what I watch.
So you're a gambling man as well, right?
Well, I mean, I gamble like I trade. I'm looking for an edge. I'm looking for a spot to get in. And I think that if you listen to news as a part of your trading routine, now again, obviously I understand the news, but I can see it. I can see the news in the tape, and usually I'll go in my chat room and say, I'll see you move ahead. What was the news? Because I know that it was, I can see that it was news that drove it. But the news is so old today. By the time I see it, I'm the 1 millionth person to get to see that news. Okay. This is not 1980 when information didn't flow. This is 2021 when a guy burps in Russia and they know about it in California in 30 seconds.
Yeah, the world has definitely changed. So let's get into some individual markets and what your thoughts are. We've had a tremendous run in the equity markets up until about the September timeframe. We've pulled back quite a bit. Now we've rallied from the bottom. Are we looking at the midst of a correction in a new bear market, or is this a new rally?
No, obviously I don't know the exact answer to that. I can only tell you this, that we got trapped and whipsawed in the down. We got short, and now we're long again. I mean, it is my opinion, and it's still my opinion, but I am long. I'll give you a full disclosure, okay? But my opinion is that we're going to see a 20 to 25% move here in the fourth quarter, and I don't believe that it can be. There's enough energy to push it 20 to 25% higher. So, although I'm long right now, because again, I'm only going to trade the trend. I'm only carrying positions based on my algorithm and based on the trend. Okay?
Well, I mean, you're trading very short time frames. I mean,
no, I mean, we've been long crude oil for almost a year.
No, okay.
So as long as the trend remains in place, we'll be in forever. In fact, in 2019, I think it was, we were long the NASDAQ 48 out of the 52 weeks. Wow. Okay, so these trades are, as long as they stay in the trend, I'm going to be in that direction, whether it be long or short. But from a personal belief, I'm long. And so I want to make sure everybody understands that I am long, but I don't think, I think there's a big, ugly sell-off coming. However, when the Federal Reserve continues to print money and continues to add to the money supply, money has got to go somewhere, and there is not a lot of great alternatives yet, but there will be a shock to the system. And you can see, I think the bond vigilantes are starting to push pretty hard, trying to push rates higher. The battle in the Federal Reserve, whether or not he's going to reappoint Jerome Powell or bring in this, Yutz, Lael Brainerd, a bigger dove to get these ridiculous packages, which will break America. There's so many bad things happening that I think that there's going to be what we'll call a fundamental news bomb. Something will come out suddenly that nobody expected and couldn't be priced in. And that will be a trigger that will send us, screeching lower. Okay. But for now, again, I'm long and I'll be long until my signals change. But I'm not real comfortable at the moment.
What do you see for the energy markets? Do you see,
crude oil going over $100 a barrel at least?
$20 WTI calls are not out of the realm of possibility?
Not at all. I mean, again, I wouldn't go, if I was going to buy call, I trade the actual future, but if I were going to buy calls, I'd buy, I think you have to buy at the money calls. I think when you buy out of the monies, you're basically throwing money in the garbage can because of the premium you're paying. But I think that crude, and we've said this since it was 35, that it's going over 100 because the ignorant energy policy that we have entered, okay, with this ridiculous green environment. Again, there's nothing wrong with trying to be green and get better. But when 97% of the world is going to continue to burn coal at record rates, okay, you're not going to get that generally clean in 5 minutes. You have no business shutting down the shale producers and the fracking business. And really all you've done is you've allowed Russia to weaponize natural gas because we could be making a fortune, not gouging Europe, not doing anything other than selling it. But of course, why not just go deeper in debt? Why produce all this and make money? Let's give the power to Russia, to Saudi Arabia and China so that we have all these bigger problems. So their crude is going higher. And I don't think it could make an all-time new high before this is all done.
Are you in the uranium trade?
I am not. I don't really have stuff, I play a little bit with Kamiko, but I don't have a good place to go for that. But certainly it has been a very good trade for those that participated.
Yeah, no doubt about it. Now let's talk a little bit about precious metals here, gold and silver. I know last time we talked, you were short silver.
Short silver, short gold, and short platinum. And now, if we're long them all right now.
You are, okay.
Right.
So are you seeing it? Well, I guess you don't predict the future. I mean, you're basically in it right now because of the trend. Correct?
Well, I do predict the future in this way. Gold will make a new high at some day. When that day is, that I can't predict. Okay. But I think people get too involved. They get too emotional. I get a lot of hate mail when I write something and I'm short. But I try to explain, and this is what you want to understand. Okay, I buy physical metals all the time. Okay, I own physical metals all the time. Now, I don't trade the physical metals. When I die, my kids will sell my physical metals. I am an accumulator because I think that physical metals are a great asset. I don't think there's any better value right now than platinum, for example, at $1,000 an ounce. And that's like half price right now.
Yeah.
But from a trading standpoint, and this is where I think people get confused as well against the banks. Everybody cries manipulation and the banks are short and they're pushing. You realize that the banks are only trading and hedging against their position they're holding anyways. They own the other side in physical metals if they're short the futures. Okay, so they're not manipulating the short side. Yeah, did I do some funky price stuff? Yeah. Listen, if you own a house, if you're selling your house, you can tell people your house is worth nothing. You're gonna tell them you're gonna inflate the value of your house and tell them it's worth more. But gold right now, I think right now the next key level is 1,800. And silver is $24. It's been very dead. The real problem is there's been no action in this precious metals right now, other than platinum's been kind of active for a relatively illiquid product.
Yeah, I would agree with all that. And I think people misunderstand the concept of time frames. I mean, you're trading gold and silver in somewhat of a shorter time frame, whereas you're investing in the physical metal for a longer time.
Correct. Listen, I'm trading either 4 minutes or I'm trading for days, weeks, or months. Look, wherever the trend takes me, why shouldn't an individual try to take a benefit of both sides of the market? Own the physical, which you assume that will appreciate over time, and trade the board or trade the futures market, Okay. And get on both sides of the market. So sometimes you're double long and sometimes you're protected against what you own physically. Why wouldn't you want to take advantage of it? I don't understand how people get so upset when you tell them that you're short, like it's a big deal. I mean, I'm only short until I'm long, and I'm only long until I'm short. What is the big deal?
It's a religion to some people.
But trust me, I know.
Do you strategize a trade for any particular period of time before you enter?
No, it's not a feeling. Everything I do is by looking at a chart. Okay. And the chart is, again, then we go to the different time frames. Day trading, I'm looking at a 4-minute and a 1-minute chart. When I'm day trading, I'm watching 16 markets at one time on one screen. Okay. One set is 4 minutes. One set is 1 minute. Okay. Because I'm looking for a particular pattern in the 4-minute to appear. So that in the 1 minute, I will be my trigger to make the trade either long or short. My longer term stuff, the swing trading stuff, is all designed from an algorithm, which is the algorithm never trades during the day. Okay. It's only based on closing prices. Why? Because I don't want to get caught up in the emotions of what can happen in any particular trading day. So we will wait for the signals to trigger overnight before, so that we don't get caught up in an emotional swing during the day.
Tom, why don't you tell us what makes a successful trader? What type of traits? I mean, I know you've trained a lot, and also I'd like to hear more about what you do day to day as far as a service.
I mean, I think what makes a successful trader is, first of all, proper capitalization. Okay. The discipline to not get involved with news. Okay. The discipline to trade the markets that they're seeing, not the markets that they want. Leverage is a very big thing. People have a tendency to get over leveraged, especially when they're making money. And then suddenly that changes and their accounts dry up and they go broke and they go, what happened? And because they were over leveraging their positions. They offer day trading margin in the futures market for a reason. It is for day trading specifically, but people tend to, as we know, sell off their winning trades and hold on to the losers because they want to get even, when you have to look at each trade as an independent event and have an exit point and an exit strategy on a day trade. Okay. Or on a trade that was intended. Okay. So we only trade based on those parameters, and we have very specific parameters of what we're going for. And I gave you some of the parameters on my day trading. The swing trading is purely based on the algorithm, and I will stay long or short until that algorithm signals a change. Now, again, the algorithm is taking all the information that I've actually fed it, okay, over the years, using the phases of the market, which I can identify, using some mathematical formulas, okay, and also understanding volatility, because you have to be able to adjust your trading strategy to how the markets are reacting today. If they're quiet, which they're sleepy again. For a couple of weeks, we're very busy. Now the ranges have become very narrow again.
Yeah.
As the ranges narrow, you can narrow up how much risk you're willing to take. Okay. But as they widen again, you have to take more risk. So you have to understand risk, which is a great name for your show. Okay. You've got to understand all these things that go on, because it's about money. The bottom line is it comes down to money, and you've got to protect what you got. Know that the market is always right, and to take your losses when they come, because you're going to have losing days. You're going to have losing periods. There is drawdowns. It's a fact of the business. And anybody who tells you differently is a liar. Okay.
Yep, okay.
You're going to lose money on occasion. You're going to have drawdowns. You have to be prepared for everything so that you don't psychologically take yourself out and break yourself.
I think that's the most challenging thing as a trader is your psychological state, and being confident enough in your trade to hold it, and being smart enough to get out when you know you're wrong.
That's why we have either algorithms for the longer term, or I have exact price points on short-term trading and exact numbers that we're trading to use to get out. And that has to be the way, because again, as I like to say, every day ain't Christmas, and there's going to be some beatdowns. You got to be prepared for them so that you can manage your capital, because without capital inventory, you got no business.
Yeah, you're out of business, definitely. James.
Tapering is the talk of the town lately. Do you think that's going to occur? And how do you think it could affect the market?
I really don't read headlines, to be honest. Okay. After work, I run either if I'm in my Vegas home, I go play poker. And if I'm in Chicago, I go play golf. But at the end of the day, in all seriousness, I think there's going to be tapering. I think that the bond vigilantes are going to push real hard. Most people don't understand how big the fixed income market is. Okay. The fixed income market is the biggest market in the world by 10 times, at least. You can add up all the other markets together. They're not as big as fixed income. So they're making one more stab here. We've got a real problem. And this is another reason that I think there's a sell-off coming. We've got so much debt, and they want to create so much more debt. Now, think about it this way. They raise a quarter point. It's $75 billion a month of more debt service for the United States. Okay. So it becomes a real problem with the tapering, but they're going to have to taper because this inflation is out of control. You've got nobody working. Okay. You're going to either end up in hyperinflation or stagflation at the current pace in which we're headed right now.
Do you want to tell us which way do you think it's going to go?
I think rates are going to go higher. I think that this is going to be, my guess is that the bond, as I call them, the bond vigilantes, they've been pushing pretty hard. Okay. And you've seen the 10 years go up, which is the key benchmark to watch. And the 10 years have risen. And I think they waited very patiently until a few weeks ago and are making a big push here. Okay. And they do have the bullets to do so. They've got the cash. So I think they're going to make an attempt and really force the Fed's hand. Okay. And I think that is, going to push rates higher and force the Fed to taper, besides the fact that they must do something unless they're really going to turn this into a socialist country. Okay. Because if they're going to do that, then you're going to see a digital coin, a global coin that is run by the central banks, which they can manipulate it at any time they want.
You won't be able to buy or sell anything without them knowing exactly what you're doing.
Well, that's where they're headed. I mean, you see now they're heading $600 in your bank account. They're going to be looking at you. So this is an ugly situation that they're going to be able to track you from the moment you're born to the moment you die.
Yeah, which is their ultimate dream. James, you have any other questions?
No, I really don't. It's been absolutely fascinating listening to you talk about trading. I'm really interested. I would love to actually read more of your research. I may become a subscriber real soon.
Hey, listen, I would love to have you, but certainly you're welcome to join me on Monday nights. I have a partner, which we do a strategy call on every Monday. Okay. It's scheduled for like 4 Eastern, but usually I get in about 3:30. We go for a couple hours of talking everything from reading the charts to actually things that are happening. In fact, on Monday night, we did a whole section on why you should be hedged now, because there's a lot of issues out there that nobody's paying attention to right now. But you're welcome to come. And certainly, if you just, you can email me at bob@bobbatrading.com and send me an email, and you'll be invited, no problem, as my guest. Come and join us and listen in. I mean, we go over all markets we cover the 29 markets we trade in futures, and then about 30 or 40 stocks that we chart them out all the way through.
That's great. Well, thank you again for showing up to Risk, and we look forward to speaking with you. And I may be joining the next call too, because I'm
love the show. Thanks so much for having me on. It's a pleasure, and I look forward to seeing you again.
All right, Todd. Take care.
Thank you.
Thank you again.
My pleasure.